Hello everybody, welcome to another charting session here on the channel. Today is April 12th. I took one trade today and it was a winner, and I'll be going over that. So first things off is that I was not really here at the market open. I was running some errands and I did not really get onto the charts until like about 10:45 to 11ish. Actually probably about like 11. So for my trade setup, we look at the past couple days. So remember here, we had this massive dump. We came back up, retraced a discount of this bigger range. As you know, price is fractal. So then after we retraced a discount of this bigger range, in this internal range, we retrace discount again. And then we get a massive buy for the rest of the day. We get this fair value gap entry, and this fair value gap entry. Actually, this is not a fair value gap. But right here on this move, the only fair value gap that was made on this entire move going up right here was this one, and this will be the first fair value gap. Tap into it, respect it, go higher. We took out this buy side and we started slowing down. So a couple things to note. This is something I did not want to see happen. This is, I said I would rather see I would rather see us retrace the discount and then head lower, just like this. I did not want us to take this buy side. The reason why is because this right here is a prominent high. It's a protected high, sort of. So number one, this is a sweep of an internal, and right, this is a sweep, so you can mark standard deviation on this. Any sweep that you can mark standard deviation on, even better if it's paired with turtle soup, it's going to be a protected liquidity. So right here, we can draw standard deviation. This is your manipulation leg. This is your protected high. And another thing is that we had such a massive dump like this, there's no engineered liquidity to target. It's just this one liquid level, and that's really it. And there's not even many positions here because, number one, who's going to put their stop all the way up here if price is down here, right? And number two, well, I guess people could do that. That's probably not a good example. But basically, this high, it was only touched once, right? It's not stacked. There's not engineered liquidity, so there's not a bunch of stacked liquidity all in this area. This is really the only liquidity. And price came up, and it got it. So, when this happens, and especially if we consolidate, just like this, there's not really any bias we can formulate. But if we look here, let me look at ES and NQ. So when we're up here, you could look for, number one, SMTs. So first thing is we had this SMT right here. If we draw this out, here's SMT, and your promised liquidity, well, the liquidity that we would probably target on this SMT move would be this low right here. The reason why is because this is the leg that created the SMT. This is the low that would get targeted. Here's the low that got targeted. And let's see if there is an SMT anywhere else. Let me go to the 5-minute here. Let me take off this stupid indicator. This thing is just terrible. Okay, so we had an SMT right here. So you see, SMT did not take the low, but ES did over here. And we also have another one right here as well. So both of these are SMTs, not that. SMT, SMT. And this is liquidity sweep. So after this, I mean, this wouldn't really be that good of structure because it's not during market open hours, but we ended up coming up to here, which if we look at this range from this low to this high, it'd be the other way. This high to this low. This did enter OTE range, and also did respect this untouched fair value gap. So this is then starting middle of the night today. Probably starting in London session, right? Yep, in London session right here. Here is the move. So this was igniting our sell model, but there's two things you could either look at here, right? If you're looking at this higher time frame, let's say we get this push down, right? And then we get these strong candles up. What do these candles reject off of? You could think of them as rejecting off of this. So if you're looking at price like right around here, you could possibly be long bias, especially because we had these two candles wick with this 5 minute, but we ended up actually going down, and then we tapped this 5 minute as an inverse, and we also tapped this 1 minute. Another thing as well, this 5 minute inverse is a good inverse because we respected it. This candle right here and this candle both respected it. Since this 5 minute was at once respected, it's most likely going to be respected again, either as an inverse or regular fair value gap. So right here, there's these two candles. We go down, we go back up, we respect it again. So after that happens, we just sell off like crazy. And this is around where New York session moves start happening. So looking further out, we had this 5 minute, and it's not in discount of this range. So first point is, what is the goal of this down move? Well, the main goal of this down move is to first reach discount of this move, right? So we have this massive leg that's up. I'll actually put this on a 1 hour to make it a little bit more understandable. So we have this leg up, and after we take out this previous high, the next thing that market wants to do is rebalance. And to rebalance, market is going to want to go down to a discount. So we come up here, we're slow, we sell off, we enter discount, right? And we actually ignore this order block. So now if we're looking at this, going back to the 5 minute, this is how I took advantage of this. So we were in discount now, and now that you're in discount, you are able to look for longs. So this is where the fractability in price comes in. So as you know, this is the higher time frame move to where we're heading down and we're going into discount. After we reach discount, we can pick a leg. So for example, right here's a leg, right here's a leg, right here's a leg, right here's a leg. These are all down legs, and then right here's an up leg, here's an up leg, here's an up leg, right here's a smaller up leg, here's another up leg. So what happens here is that I want you to notice each leg. So we have this leg. This leg is in premium, right? Out of this entire range right here, out of this range, this previous range, as we're going down to rebalance, this leg right here is in it's in premium. It's above 50%. When you're above 50%, you do not want to look to long anything because price is expected to go down here to discount. You only want to long in discount and you want to short in premium, right? In a picture perfect market. So right here, we have this first leg. It's in premium. So what's going to happen? All long opportunities are going to be more or less likely. When you're longing at a leg like this, trying to rebalance, most likely, if you're in a premium, you're not going to retrace to 50%. So as you can see right here, discount, where did this leg go to? It did not go to 50%. Okay, now let's look at this leg. We go from the top of this leg, right, top of it, down to this bottom, and this one does look like it did tap discount, right? And it does happen, right? It will tap discount sometimes, but sometimes it won't. We go down to this leg. Let's see if this leg tapped discount. This one did not tap discount. And then we go down here to this leg. So this leg is now in a discount. Here's the 50% level. We're good down to discount. So this is where you could take a long position if you get a good setup. So number one, we create this low. At this low, we create an SMT, a bullish SMT. And zooming in even more, we also created this internal SMT, right? After this happens, and you can see after we create this first SMT, which was right here, I saw this and I was waiting to take an entry until we got an internal sweep because, right, this is an external SMT. Before an internal move to happen to create an external move, we need to have an internal algorithm. So here's the internal SMT right after this internal sweep. And strong displacement back up. So in this move back up, you're wanting to find a rebalance in price or either the first fair value gap that's present. So on this 1 minute chart, and that's usually where you're going to want to look for entries like this, it's going to be on the 1 minute. If you do a 15-second, it's not really going to be that probable unless you find a 15-second little small model. So I'm going to kind of explain how I took this trade step by step. So let's go into replay mode here. I'm going to go right here. So as you can see, with this leg up, we had not created any fair value gaps. There's no fair value gaps here. And if we look at ES, we want to see, is there any, what just happened? Where did my chart, what? Hold on. Why is my chart down there? What's going on? How do I fix this? Oh, there we go. No, that's not what I wanted to do. There we go. Uh-oh, I don't think I have a chart. Why did this just happen? There we go. Okay. So, if we look at ES here, we go here. Actually, let's go to the 1 minute. I do want to see if we had any fair value gaps on ES during this move. So right here, here is our move, no fair value gaps. So if there are no fair value gaps, you want to look to see if there's any sort of PD array. Number one, you may think, well, we have this right here. And this could work. The only problem is that it's not in discount. Second off, we have this inverse fair value gap, but the only thing that happened is that it actually price cut through it twice. So it's not a valid inverse fair value gap. So the only thing that you can really look for, and the best thing you can really look for, is standard deviation, which actually works really well. So here, my entry was right here. But anyways, what happened is that price came down, tapped into this, and I entered on this candle. So we tapped down, came back up, I entered right here. And right after that, we also tapped OTE, right into OTE range, and strongly rejected up. After we rejected up, we got this fair value gap. So here's how the entries work. There's first entry. I'll type this out. First entry, which is basically off of this is for turtle soup. So let me turtle soup entries. So this is sort of how I like to do them. Different people have different type of entries, but this is my type of entries that I have found pretty good success with. So number one is the first entry, which is the first fair value gap that you see, or first PD array. So I'm going to just do this. First PD array tapped into. These PD arrays usually will be consisted of fair value gaps or OTE. So right here is your OTE, or it could actually be all right, OTE discount. Okay, so the first thing that could this be is OTE or discount. All right, mine was discount. So discount would be your first entry. And what I like to do is I sort of like to let it go up a little bit just to see that it's respecting. The reason why I like to do that, one, it gives me a little more conviction in the trade. Two, if we tap discount, usually what's going to happen is we're either going to massively sell off, which we kind of did here, or we're going to slow down with it. So if you just put a limit in, sometimes you'll notice that, let's say you have, let's say your limit orders right here. You'll notice that sometimes prices do this. Sometimes, does this. Actually, it'd be down. Okay, so sometimes price does this. Oh, wait, no. Hold on. I messed that all up. I literally just messed that all up. Okay. Let's say price comes down. This is discount. Sometimes price may be working its way down, and then right when it taps discount, it will just sell off. And I've noticed that because I have done that sometimes where I put a limited order in, like this. Let's say I put my stop here. Price will just run straight to the stop. So that is sort of why I like to see a little confirmation. And if you are a trader that likes, extra confirmation, this is where the second entry comes in. So the second entry is always way more probable. It's honestly probably the best entry you can take. And that is after we have after displacement from first entry, fair value gap tap. Okay. So basically what I'm meaning in here too, or this is basically what I'm meaning here is that we tapped this PD array, which is OTE/discount. Okay. We shot right back up. So this is showing with this model right here, this first entry is playing out. Since the first entry plays out, it shows us that we're bullish and that this model may work out. So right here, you have the second entry, and this is where most people will probably want to put their entries. So we come down, we tap into here, and then we came back higher. So, and also keep this in mind. If you're looking at fractability, this is an external leg, and this is an internal leg, and this is an even more internal leg. Why do I say that? Well, look at this. At this leg, we tap discount, and this is the leg created down. Okay. After that, if we look from this candle right here, we tap discount of this candle. We actually go above discount, go all the way up here. But then also out of this smaller leg right here, out of this very much smaller leg, which is right here, this wick taps into discount of this smaller leg. So I'll kind of go over that. You'll see it in my course. I mean, it should be in the course sometime soon. I haven't made it yet, but if you're watching this in like the future, like a couple weeks after I publish this, it's in the course. So, and I also talk about it a lot more in other charting sessions. So we come up and we create this other 1 minute for value gap. So third entry is sort of the same thing, but it's called the reaccumulation. So reaccumulation, and this is when retrace to PD array after second entry gets displaced from. Right, I don't know why there's no reaccumulation. Hold on, just gonna do it. Accumulation. Reaccumulation. Okay, close enough. So this is what this means. So we come up, and this is your first entry. This is your second entry. Oops, let me get on. Let me delete this. There we go. So here's your first entry. Here's your second entry. We come back up, displace. Here would be your third entry. The reason why is because we took out all of these highs, got a massive run up, and after this massive run up, we're usually going to want to rebalance. So we watch price here, we come back down, tap this 1 minute. As you can see, we beautifully respect off. this is your third entry, which is your accumulation. So now after this happens, I'm also going to circle. How do I do this? Where's the circle? Circle. I'm going to circle each thing. So here's entry number 1, right? And then here's entry number 2. And then here's entry number 3. So after this move happens, we are not really guaranteed that we're going to get another entry. The reason why is because usually the market likes to give, likes to work in powers of 3, and the market's usually going to want to just give 3 entries and then just run straight up. Sometimes you get a 4th, but if you're getting a 4th entry, you're most likely chasing. And also, this did not tap into discount. Usually this does tap into discount, but it just happened to not. And I think the reason why is because this fair value gap was just above discount, and it was the only fair value gap of this entire move, except this one, but this is not really going to be accumulation. So after this happens, we may create another fractal to where we don't take out price. We may just generate some structure, but here we just took it out. So we come up, and as you can see, we tap another fair value gap, and then we just work our way up. So my profit, my take profit here was, okay. So I think it was discount. It's right where this is. So I think it's discount of this leg. No. Discount of this leg. Yeah. So as price is fractal, if we look at a higher time frame leg, at a higher time frame we have sort of, I would call this 3 legs. So we have, sorry, not 3 legs, 3 up drives. So we have 1, right? This is your 1 pullback. This is your second pullback. And here on an internal model, I was trading an external pullback. So again, this is your pullback to then possibly head lower. So that is why I only targeted 50% of the range, because I was trading an internal model inside of an external model. The external model was bearish, but the internal model was bullish to rebalance price inside of the external model, right? So this is the first take profit. Another one could be at this high, and we did take that, sold right back off. And I also want to see OT. So yeah, we did actually go above OT here, but if we look at this range right here, tapped golden ratio. So after this, I stopped looking in the market. I really didn't care what it did. As you can see, we sort of consolidated. We sold back off, took this low. So now that after this would happen, here's a couple things you could look at. So number 1, is there an SMT at this high? No, there's not. Is there an SMT here maybe? Yep. Okay. This is perfect. So we create an SMT right here. And so this is how this would work. So you see, we displace down. We come back up, displace down again. And right here at this SMT, we did not create, we did not take out this low. We come back up. We actually then took out this low, come back up, create SMT. So now after this SMT is created, we want to see what's going to happen here. So out of this leg right here, our target is usually going to be discount. So on this right here, we did tap discount already. And we also respected this 1 minute for value gap. So there's different types of ways you can take a turtle soup. If you see that, you have to align it with the external model. So if we're showing bullish right here, this is possibly bullish structure. We have a sweep of this low, tap in a 1 minute, tap in a discount. We could run back up, right? We could run a lot higher. And we're also in a discount of this entire massive range, right? So that's showing that price could go a lot higher. But the only thing that would negate this is if we take out this low and we keep going lower. So right here, we took out this low. It was not a sweep. We took it out. We kept going lower. All right. So after this happens, we want to see what could possibly happen. So if this is showing a bearish move because we're disrespecting these bullish PD arrays, right? This low is a bullish PD array because it could possibly be swept to go higher. Discount is a bullish PD array. This 1 minute for value gap is a bullish PD array, right? We come back down, we take out this low, keep going down. What's the first fair value gap that we see? It's this one. So this is technically a second entry because your first entry would be on this displacement down, right? There's different ways to take entries, right? First entry usually would actually be on the displacement up, right? So this is, hold on, let me reword this. So this could actually be 2, 3, 4, but number 1 isn't really necessarily an entry. I would call, it's not like an algorithmic entry. You're just seeing price go up and you're buying. A real entry is when we rebalance. Okay, so here's your first entry. We rebalance to this 1 minute for value gap. It's the first one that we see. We don't have to see it come all the way back up here because 1, we're already showing bullish structure, and 2, the first fair value gap is usually pretty powerful. So we come back down and we do this entire down move. We come back up. Here is your next fair value gap that we tap into. So then looking at this model, you want to put this in correlation to structure. And you can usually do this by the size of the moves. So right here, look at, just pay attention to the size of this leg, size of this leg, size of this, right? All the sizes are sort of the same. So this is all in the same fractal, okay? If you're taking this setup right here, you would want a partial at this low. So we could put, right, I can mark out TP at this low. Can mark out TP down at this low, and you can mark your final TP down at this low. After this happens, I would not touch. You could also actually mark it down at this low too. But this low right here, keep in mind this low is not part of this model, right? The turtle soup really only guarantees you this low because this is the leg the turtle soup's retracement was on, right? This is the leg of retracement on a bigger time frame. This is the turtle soup that happened before it. And so with fractability, you would target this as your final low, right? And like another thing with fractability, for example, let's say we were trying to find an internal move for this, okay? So let's just see. Pretend there was an SMT right here at these lows, right? There's not an SMT, but just pretend there was. If there was an SMT at these lows, you saw displacement up, your TP would probably be this high. Either this high, discount of this range, or this for value gap. I would probably take this for value gap because this for value gap is the second entry of this more prominent turtle soup. Besides we're in a premium, you don't usually would want to, or besides we're in a discount, so you wouldn't really want to sell. Actually, no, we're in discount of this entire thing, but yeah. Hold on, let me find the higher time frame discount. Actually, it is right here. But of this leg right here, we're in a premium. So all this structure right here, all of this, actually doesn't really relate to premium discount of this entire range right here because the fractability is not aligned. But instead, all of this action would actually be in correlation with this leg, right? Which we had tapped premium. We're in a sell model now, so this would play out pretty nice. And going down here, let's see where we finished off at. Actually, it's going to take a while. I'm just going to get out of replay mode. We just consolidated the rest of the day. So after that, I wouldn't really care to look through this. This is not efficient action is. But yeah, those are the two trades you could have possibly taken a day. So yeah, let me take all this out and let's go into the bias for tomorrow. So I'm gonna pull this up. So I'm gonna get out of this. All right. So tomorrow we have, oh wait, not tomorrow, Monday. Monday, I most likely, will I be trading Monday? Probably not, because Monday I have 2 exams. So I'm not going to trade Monday. There is just this stuff right here. I might try to trade like around 9 o'clock, but that's really it. Maybe like market open. Maybe until like 11 I'll try to trade, but after that I'm not going to. So yeah, that's for tomorrow. And then my prediction, honestly, as crazy as it sounds, I would kind of like us to go higher. The reason why, if we look at this 15-minute, looking at this leg right here, I would want us to rebalance back up to here. Right? I don't really want us to take out this high. Right, I don't want to take out this high unless we sold back off again like we just did. But why do I kind of want us to go higher? Well, one, we have to rebalance. That's sort of what the market wants to do. So anywhere into premium of this range. But that would also set up a fractability model here. So, for example, what happened here? This is a leg, this leg's in the same fractability, right? So this leg came up and actually took out this high, and then this leg came all the way down, but as you can see, it really didn't have much of a reaction off of discount, right? When we tapped the 50% area, we didn't go back higher. We just did this little thing right here and tapped this 15-minute for value gap. So here, if we can go up to premium, if we can go above this 50% level, create a sell model, that would make it a lot more higher probability to then take out all these lows and continue lower. Additionally, I do not want to take out this low or this low, obviously, because this would just make more stacked lows, right? We have this, I'll mark this as day low. Right, I gotta get updated with all this stuff. I'll mark this as day high. So right here, if we sweep this day low, that's one engineered liquidity that we just took away, right? The more engineered the sell side liquidity that we have, which is right here, the higher chance that we're going to take it all out. So if we can create, if this can become a sell side level and we can go higher, this is going to want to get targeted in the future, especially because we have all these ones next to it, and then we have these, and then we have those two, right? So I do want to try to find a move to go higher or either a move to go down. Most likely, we're probably going to do something like this in the overnight session. We're probably going to just, build some accumulative structure, and then maybe we'll start the morning off somewhere around here, and then maybe we'll get a pump up at this high, some sort of SMT reversal move, and then some sort of internal structure that could also combine with this SMT. That would be perfect. And then we sell off, right? And just keep selling off. Maybe rebalance to, what for value gap is this? I don't know what for value gap that is, but we may rebalance down to that for value gap. So this is sort of the structure I'm looking in for tomorrow, something among those lines. But yeah, that's really all I have for today's charting session. I hope you all have enjoyed, and I'll see you in the next one.